Hi, good evening, dear friend. Welcome to our webinars tonight. Before I start, I would like to do a sound check. If you can hear me clearly, please help to tick yes in the poll. Yeah, okay. I've seen most of you already tick yes, so I believe that my sound is working. All right. Okay, now I'm closing it. Okay, yeah. So first of all, I hope you guys know you're amazing as you could having fun for chilling at this hour. Yet you are here with us to pick up more knowledge. Rest assured, all of us is going to learn and get back something really valuable tonight from Mr. Bong Jeen Hao. Let's start trading stocks with trend followings. I'm your host of the night. My name is Hong Sing from Philips Capital Sandriam Berhad. Throughout these webinars, if you have any questions, do not hesitate to type them into the question box so I could forward your question during the Q&A sections later to the speakers to answer before the webinar ends. Don't be shy. First things first, this presentation has not been reviewed by Security Commission Malaysia and it provides solely for general information and learning purpose and does not consist any recommendations. We are not liable for losing a rights based on these informations and so kindly seek advice from qualified advisor or dealer before making any investment decisions. We have them all around and you can reach us easily at Philips Capital. Here, allow me to have a brief introduction to our new friends here tonight if you are first time to join our webinars and it's your first time knowing us. Philip Capital Sdn Berhad is a wholly owned subsidiary of Philip Capital Holdings Sdn Berhad, our mother's company, which is from Singapore. We are in corporate since year 1995. Next, Philip Capital is a legit trading and clearing participant of Bursa Malaysia Derivative and Clearing Berhad, and also a holders of Capital Market Service License (CMSL). Our headquarters of Philips Capital Sdn Berhad is based in Kuala Lumpur, and we are currently having branch across Malaysia at Kota Damansara, Melaka, Penang, Johor, and in East Malaysia we have it in Kuching and Sibu in Sarawak, and also for Sabah we're having our Kota Kinabalu branch. On last year, we have the best overall, best retail, and best institutional derivative training participants awards from Bursa Malaysia. Tonight, Philip Capital would like to take this opportunity to extend our biggest gratitude to our clients. We are not achieving this without the great support and trust from our clients. Our mother's companies, Philips Capital, has footprints and branches established widely over 15 different countries, as you can see from this map. We have office over these 15 countries as point out. In Philips Capitals, we are covering products, lists, and numerous exchanges such as Singapore Exchange, the popular CME, CBOT, NYMEX, Hong Kong Exchange, and more. With our global exchange covered, clients are easily accessed to trade both local and foreign products within a same platform that we offer. Let's take a glance on our products available at Philips Capital Sdn Berhad. So the two main products that we are currently offering are actually futures trading, which consists of interest rate, indexes, energy, agriculture, such as crude palm oil, and metal futures such as gold. And secondly, CFD, also known as contract for difference. This is one for stocks traders. These CFD products offer a very attractive margin requirement. You may talk to us anytime to know more about it. And lastly, equity, which is consists of Malaysia, Singapore, Hong Kong, and also US shares. So why Philips Capital is your choice? First thing, Philips Capital actually having headquarters is 24 hours available for broking and execution support. This is one huge comfort for clients who trade foreign futures, whereby there are dealers that could assist on your inquiries or handle your issues at any time. And also, we are actually sending our latest market news and market commentaries to all of our clients through emails on daily basis. And further ado, we are actually providing advisory service to the inquiries on what kind of products you are looking to trade and how you can get started in trading. And last, we are actually providing wide array of products in our trading platform and that enables clients to trade both local and foreign products easily. So at Philip Capitals, we actually offer free one-to-one coaching sessions, which is free seminars and webinars, and also a free account openings. All you need to do is just fund in a minimum 1,000 to active your account, and the money can be used for trading later. Feel free to reach us anytime. And for our free one-to-one coaching sessions, we are targeted on the beginners. We are covering introductions to futures trading to understand the trading products better, and surely our trading platform coaching as well as to understand better and set up your own charting system. If you do need this kind of coaching, do not hesitate to reach out to our representative. So we have launched the first trading online account openings in Malaysia. You can now open futures trading account easily with us. Feel free to visit our website or scan the QR code if you would like to online opens the online account, use to open the online account openings. The process is not complicated. Basically, you will just need take your 10 minutes to fill out the necessary details. Yeah, so if you need any guidance, feel free to contact us. So next is for our trading platforms for futures trading. We call it as Philip Nova. You can get to access the robust trading products here. So there are actually two ways you can do for your trading. First is for the desktop versions. It's a web-based platform which gives you a very nice and professional view. And for the mobile version, you trade through the Philips Nova apps, which allow you to trade easily at anywhere, anytime. You may scan for a screenshot the QR codes to register for a free demo account. You may try it out because you can find out our Philips Nova mobile apps from Google Play Store and also from App Store for Apple user. So this is the Philips CFD Traders, which is a platform that's specially designed for CFD tradings. In the applications, we are actually providing live charting systems, price alerts, live market price mirroring exchange, and also advanced order type. So a bit about our current ongoing promotions. This is the trade share CFD at only 0.3% for a limited time only. Philip Capital is actually offering trade share CFD at only 0.3% for the share values. Products available which includes Bursa, NYSE, and also Nasdaq share CFD. The promotions are actually runs from 1st of August to 31 of October 2022. Do not miss out this opportunity. Register now to trade your desired CFD counter at a discount rate of 0.3%. Okay, welcome to scan the QR code to know more and contact with our dealer. And the next one is the CFD promo, which is the US Index CFD, will allow you to enjoy the best rates for trading US indices CFD with us at only USD2 per contract. The promotion period is held from 1st of March until the 30th of September. Okay, so it consists of three popular US indexes, which is the Wall Street Index, Tech 100 Index, and also S&P 500 Index. They allow you to trade as low as USD2. So the last one is finally the Philip Star products. We are start from 31 of December, which start from now until 31 of December. For our exclusive client, you are able to enjoy a super low rates to trading micro crude oil, E-minis, golds, and also A50. So if you're interested to trade the following products, don't hesitate to register with us. So here's a little introductions to our speakers tonight. Mr. Bong Jeen Hao is the founder of and chief master trainers of street finance. He started his footprint in investing and the capital markets when he was just 19 years old. As a position trader in the capital markets, he primarily utilized the trend following strategies to capture big trend in the markets. He's also the founder of his street trader philosophy, which allowed traders to trade anywhere and anytime. With just a cell phone, he teaching trading based on his philosophy in his signature program is also known as Street Trader Intensive. So let us to welcome Mr. Bong. It's your time now. I will pass to you.
All right, thank you. And let me just see if I can show my screen. Can I know which screen you are looking at right now? Or are you not
Yeah,
looking any?
yeah, able to looking at your slide for the PowerPoint one.
Okay, so because I have two screens, let me. Can you see my full screen now, which is my second monitor?
Yeah, correct. We are able to share the full screen of the slide right now.
All right, so including the cursor and then also the pointer, am I right?
Yeah, correct.
All right, okay, we are good to go. Thank you, thank you, Hong Sing, for the introduction and also helping me to check out the uh, all the nitty-gritties of the technical part. All right, so first of all, thank you, Philip Capital, for having me here today to share with you how you can get started trading stocks with trend following. My name is Jeen Hao, and one thing I'd like to apologize is that I couldn't share my webcam for tonight. I hope you guys, I think you guys wouldn't bother about it, but because I couldn't share it tonight, just so to let you guys know, because there is some technical errors part that I had with the platform GoToWebinar, but nonetheless, I hope that the audio part is clear and you can see my screen. All right, so without further ado, let's begin. Okay, so disclaimer, just basically there are no buy or sell calls and things along those lines. Everything is just for educational purpose only. And this is my speaker profile, just a simple one. Hong Sing has already introduced me just now, so you cannot see my webcam for tonight. It's fine. I look roughly like that. Okay, so if you would like to see more sessions like me analyzing the stock market and things like that, you can go ahead and follow me on Facebook, because I do live stream to comment about the stock market from the technical analysis or trend followers perspective most of the time, and sometimes a little bit about investing every Sunday 8 p.m. Malaysia time. So if you're into that, you can go and follow my Facebook. Okay, and these are the content outline that we're going to cover tonight. First thing, trend versus news, and which should you follow? And I think that we are in a very interesting period of time right now, because Paul is going to speak later, and we all think that the market is very uncertain because there are way too much uncertainty. However, it seems like the stock market is okay. Okay, I'll elaborate along the lines, but I will have syllabus to cover tonight. So if we have extra time, I will insert bits here and there to let you guys know, the current things in the market right now. Second, what is trend and why you should trade with the trend? And thirdly, how to analyze and follow trending sectors. And fourth, structure your trading plan with 4-step T.E.S.T process. I'll also be giving extra examples later, okay, meaning that apart from what we have done on the slides. So let's move on. Now, first, how would stock price react to news? Okay, so this was like, I believe last year, okay, the beginning of last year, April 27. So Sapura Energy secured 6 oil and gas contracts worth 1 billion ringgit Malaysia. Now, this kind of news, like a lot of people would get obsessed with it and think that, okay, this is good news, okay, stock price will go up and things along those lines. But a lot of time, if we react to news, we're not going to get a really good results. This is just one of the many examples where Sapura Energy secures 6 oil and gas contracts worth whatever the value is. You see, the stock price doesn't go up because of the news. You can see that the stock price basically did not move, despite the fact that a lot of people think that this is great news, okay, on the surface. Okay, so now how about looking at the trend? You can see that the trend is a downtrend overall. Although you have ups and downs, but looking at this chart in general, it's a downtrend. And downtrend, okay, would immediately tell you that, okay, from trend traders perspective, it will have a higher probability to go down no matter what. Okay, and you can definitely see that, okay, in 2022, entering 2022, this stock basically went a lot lower to 4 cents compared to 13.5 cents when the news is like, released back in second quarter of 2021. Entering 2022, basically the trend continues and this stock remains very weak. Okay. And we all know that during the first half of the year, okay, oil and gas stocks, okay, energy related stocks, energy related stocks are very strong, but these stocks remains very weak. Okay, if as opposed to trading stocks in the US like ExxonMobil, Chevron, and things like that, you will make a lot more money. All right. So next, good results versus stock prices. Now, we have to understand that, okay, good results is great, but it doesn't mean that the stock price would go up, because a lot of times the market participants' anticipation or public expectation has already been factored into the stock price. Just look at the glove stocks back in 2020 and 2021. Okay, despite the fact that the results were great, the stock price remains down no matter what after it has peaked at this area. Okay, so those are the things that you need to understand. And right now, where is glove stocks right now? What's the price? Okay, we all know that there are really like a lot of them become penny stocks already, okay, including the top one. Okay, so here are the things to consider. Okay, news doesn't matter. Seriously, news doesn't matter. If you have been chasing for news, okay, in your trading or investing journey, I dare to say that most of the time, things are not going to look great. Okay, you are not making money because of news. Okay, now what's more important apart from what's more important than news is actually how people react to the news. Okay, how people react to the news. Now, however, there are no ways to know how each and every player in the market thinks about the news. Maybe some people think that, okay, this great result is not good enough, and then they will start selling. You can never know what other people are truly thinking about the whatever announcement. Therefore, everything is just a guess, and people's expectation has also been factored into the price. And also, you have to consider insiders' movement, people who have the ability to control the price. Okay, just think about it. Just think about it. If you are working in a lousy company, okay, if you are working in a lousy company, and your company happen to get some contracts worth whatever millions and billions, and you will clearly know that there are a bunch of people out there who don't know this piece of news, and there are people who read the news for whatever reasons. When your company announce the news that, okay, your company is awarded by this and that and things like that, you will probably take that as an opportunity to sell the shares, because you are not confident with your company over the long run. This happens in a lot of stocks. I'm not sure if you can recall. I don't think it's good to call out the names, but if you have been in the market, you know what I'm talking about. And also, sometimes the stock prices can go up like without any news, and people was asking, okay, some people would want news to confirm the movement, and that's why they are seeking for news. Okay, my suggestion to you is don't be fed by news. Okay, don't always try to find news that support whatever thing. News is there just to feed people's whatever expectation or needs. If you are a journalist, okay, let's say Powell is going to have a speech tonight. Okay, if the speech is good, is great, you have a headline. If the speech is not good, you probably have another headline. So no matter what, you already have two sets of headlines. So it doesn't matter. News is there to be published to let people who want to read, okay, to read it. Okay, it's there to feed certain people. So as a wise trader investor, don't get affected by that. Understand that today, if I'm working in a listed company, Okay, without the public knowing first, I would definitely have the insiders, you know, even if you don't have quote unquote insider news, you are working in an apparel, you know, shop that is being listed. Okay, and you would probably have an idea whether or not this quarter is going to be better than the previous or not, because you work inside. Okay, and if it is going to be greater than the previous, you probably will buy your own company's shares. And when a lot of insiders or people who are working in the company started buying, they asked their friends, their parents, their wife, their husbands' friends, or whatever, okay, to buy, then the extra demand of the shares is going to drive prices up. And that's why a lot of times we see the companies stock prices go up without any news, and then after maybe 1 week they announce a good result, and then people was like, oh, the share price gone up because of the news. Actually, a lot of times the share price goes up before announcement, any announcement. All right, so insiders movement is something that you need to consider. So regardless what's happening, big buyers and sellers always leave footprints in the market, and that's price and volume. Now, insiders movement, they can move first without announcing anything, but what they cannot lie is the price and volume. So technical analysis assumes that all known fundamentals and news are already factored into the price. It's already been priced in. So here are things that I think right off the bat I have to tell you. Don't always find news. Okay. Like some people, they are still worried about the high inflation, high interest rate, and then they're worrying whether or not the problems in China right now will affect the world and things like that. But here's one fact: the US stock market has gone up since about 1.5 to 2 months ago. And personally, even in my public Telegram group, not my close graduate students, even in my public group, I have already mentioned a couple of times and even have some candy drops telling people that I am buying. Okay, I was buying since last month. Okay, since last month. And you don't have to be very creative in finding stocks. Trading the S&P 500 index alone, be it you trade futures or you trade the ETFs or you trade the whatever leverage ETFs, anything, okay, because it's going up, the trend is up, you can make money. Okay, the only thing I care is trend, while other people still care about like the market's going to crash. If you go to YouTube, literally a lot of people are saying that the market is still going to go down, while they are still thinking that the market has a chance to go lower. I have already made money since last month. That's the reason why we learn technical analysis, because we know that fundamentals, they don't reflect things on time. Okay, fundamentals and news, they don't reflect things on time. Right? So next, I want to explain what is trend and why you should trade with the trend. I'm not sure if the chat box is open. I feel that it is, maybe it's not, but it's okay. Okay, so I have two questions here. Did you encounter such situations? First, you look at the stock price has been dropping and it looks cheap. You buy the stocks, however, the stock just becomes cheaper and cheaper. I believe a lot of you may encounter this before. Or you look at the stock price has been going up and you feel like it's very expensive and you feel like you are late for the party. You end up not buying it. However, the stock price just moves higher and higher and you always feel like last week or last month was the best time to buy. These two scenarios perfectly illustrate what trend is all about. Okay, so follow the trend, you're following the smart money. The core belief of trend following is that the trend is more likely to continue rather than reverse. An uptrend has a higher probability to go up and a downtrend has a higher probability to go down. So trend traders or trend followers will look into going long in an uptrend or looking into going short in a downtrend. However, since we are talking about stocks right now, I have to tell you that generally I don't short stocks because downtrend in stocks tend not to last long. Okay, it's unlike like futures like FCPO, whereby the downtrend can go very long, and because it's a leveraged product itself, you can profit a lot from downtrend, even if the movement is not a lot. Stocks itself is quite tough, and not to mention that in Malaysia, you can only do intraday. So I don't do anything intraday because I follow big trends. Now, this is an example of an uptrend. Again, not a buy or sell call. Okay, so this is just for example. So you can see that this one, it has been going up. This is Bursa stocks, and then it retraced back down. And as long as, okay, it's still going up, the overall trend is still up, the chances for it to go up is definitely there. Okay, you see previously it was very strong until it didn't really have much retracement, and for 1 to 1.5 months it started to have a correction, and after that it recovers. So when it recovers, okay, this is the time whereby you need to look at the stock. You need to look at the stock because it has the chance to be in play again. Okay, so next one is Bonia. Okay, this is just an example. Again, you see, those whoever insiders or big buyers, they buy it up, and then the stock retrace or have correction for a month. Then after that, slowly going back up again, and then you have a 1.5 month retracement, and then boom, go up again. So this consolidation period is actually a great time to monitor that. If it has a breakout, you can probably do whatever, okay, your own due diligence, and then you can plot your entries and stop loss accordingly. Now, this is another one, strong uptrend in Malaysia. So again, you can see it went all the way up and then it consolidated for more than a month, and then it has a breakout. So breakout is a trend continuation pattern. Okay, breakout is a trend continuation pattern. So it shot up, retrace back down, and then turn up again. Shot up, form a new high, retrace back down, and turn up again. So these are the things that you need to watch. Okay, so these are the stocks that probably make you feel that, okay, last week or last month is the best time to buy. Okay, but again, you don't buy right off the bat. Okay, you also need to find chances, okay, to buy, which later I will share with you a little bit. Okay, now how to analyze and follow trending sectors. So here are some of the tips that I can share with you how you can actually analyze the broad market and get an idea how the market is like. Okay, so things to look at. The first thing that you need to see is major indices, the DJI, the S&P 500, and NASDAQ over the US. So S&P 500 represents the broad market condition, and DJI, because its components are mostly the traditional sectors, your banks, your some of the consumer stocks, your oil and gas and things like that. So DJI, the Dow Jones Industrial Average, usually represents some of the traditional or defensive sectors. So I'm not sure if you still remember that period of time whereby the DJI performs relatively stronger than the NASDAQ. That was the time whereby the technology sector is weak and some of the consumer stocks of the defensive sectors are stronger. So here, these are the things that you can, get some idea on what's happening in the market and things like that. So for example, if NASDAQ were to go up again and become stronger and stronger and stronger, definitely you know that the technology and the small cap or the growth stocks are going to be better. Okay, now the next thing is sector indexes like technology, industrial products, plantation in Malaysia. So for example, if you see that the technology sector or sector index, okay, let me just search here. Okay, so you can see that, I believe you can see. Okay, so this is the technology sector index in Malaysia. So you can see that it has been going down. So that's why Malaysia's tech stocks have been really weak. Okay, and you can see that recently it started to go up. Okay, together with where the Nasdaq and S&P 500 actually bottom out, and then it went up, go down, and then if technology sector were to turn up again, that's when you should start focusing on Malaysia's technology stocks if you are trading in the Malaysia market. So you should probably look at those tech stocks like Inari, MPI, Unisam, and things along those lines. Okay, so if the sector index is strong, it means that that sector is getting a lot of smart monies. It's getting a lot of money flow into the entire sector, and stocks always move in group. Okay, sometimes you don't have the entire group moving up because you have a team. Okay, like for example, a couple of years ago, whereby ringgit becomes weak, you have one thing called export related sectors. Okay, meaning that any businesses, any companies that are dealing with exports because they receive US dollar, those stocks are being in play and being speculated a lot. Okay, so you need to watch this kind of movement as well. Okay, be it you are trading US or you are trading Malaysia or even Hong Kong. All right. So next is like, for example, subsectors. Glove sectors is actually a subsectors because glove is actually under healthcare for the most part. Right. So pay some attention on the stocks that are moving in groups. Okay, they are moving in groups. All right. So next, going to the last part, okay, which I think you will find the most information and tactics, okay, which is how you can structure your trading plan with this 4-step T.E.S.T process. Okay, so here are the 4 steps. The first step, you're going to look at the trend. Second, if the trend is up, okay, then the first step is pass. After that, you look for an entry. Now, there are a couple of ways to plot entries. Okay, there are a couple of ways to plot entry. So let me just show you very quickly a few. Now, first thing, uptrend, meaning that the stock is forming higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So what we want to do is, at least my practice, when it's uptrend, I buy when it starts turning up. Meaning that the stock goes up, come down, and it turns up. And then we have a swing low as an example, as a reference. Why do I buy when it is turning up? It's because if the stock is going up and down like this, yes, it is uptrend, but if I were to buy here, first, I don't have a good reference for stop loss. Second, who knows, the stock might go down like this and break the previous swing low and probably enter into a downtrend. So I don't buy when it is dropping for the most part. I buy when it is turning up. Okay, I buy when it's turning up. So this is my entry and the previous low is a reference. And below the previous low, then I set my stop loss. Okay, I set my stop loss. So should the stock go down and hit my stop loss, the reason why I set my stop loss like this is because when it breaks previous low, it means that it could be some weaknesses, okay, or a beginning of a downtrend, right? A beginning of a downtrend. So this is the reason why we set stop loss like this. Now, what if the stock go up higher and higher and higher and higher? What we do is we move our initial stop loss upward. We move our initial stop loss upward. We move our initial stop loss upward. And this is what we call trailing stop. Okay. So this is the trailing stop and this is a trailing stop. And one day, if we hit our trailing stop, then we will sell. But now, trailing stop is a very powerful technique. Why? because we don't guess where is the highest point. A lot of time we try to guess, okay, where is the highest point, okay, how far a stock could go. Now, to be honest, I don't think there are a lot of people who actually expect stocks like Top Glove to go up from 4 ringgit all the way up to like 30 bucks. Okay, not a lot of people expect that. Okay, but how can we capture such trend? We use trailing stop. Now, of course, if you don't have the guts or you don't have enough confidence to trail all the way up, meaning that you keep holding, okay, maybe you buy Top Glove at 6, 7 bucks and then it holds to 8, 9, 10, 12, 14, 15, 20, 22, 25, 30. Maybe you don't have the guts or the confidence to hold all the way up. What you can do is halfway during the process or during the trend, you can take partial profit. Okay, you can take partial profit. So these are the process that I use on a daily basis, and not daily because I don't trade every day, but every single trade that I trade, I follow this process. All right, so I'm going to show you some example. Okay, I have one example in this slide, and also I'll take out my charting tool later and share with you a little bit more that is more reason. Okay, now this is an example of uptrend. So you can see that when the trend is going up, like what I said just now, the first thing that you can do is you have to ask yourself, where is the trend continuation pattern? So you can see that here it breaks out from this one. Okay, so it has been going up, and then it consolidates, things like that, and then it boom, break out. This is a trend continuation pattern, meaning that it goes higher. It goes higher. Just like what I mentioned just now, rebound is also a trend continuation pattern because it is forming a higher low. So you just have to remember uptrend, okay, uptrend equals to higher high plus higher low. There are two basic strategy you can form with this. Okay, when a stock is going up, and retrace and rebound, we have a higher low. So rebound strategy is formed based on higher low. And this one, this example right here is because of higher high, because it breaks out. When it breaks out, it forms a higher high. Therefore, it is also an uptrend continuation pattern. So right over here is a resistance, and it break out, you can enter right here. Now, what if you miss it? It's fine. It goes up, come back down, and rebound. So here you can enter, and this is also a great point to enter because previous resistance turned into a support. So if you have a little bit of technical analysis knowledge, you would know what this is all about. Okay, it is a how to find basic support and resistance and things like that. Okay, so here is also how you can enter based on rebound, here based on rebound. All right, so and if you enter the stocks, if you enter a stock maybe around here on this breakout, okay, and then you buy somewhere around like 130, okay, where it turn up, you move your initial stop loss from here to here, and from here to probably around here. All right, and another way you can set your stop loss is using one indicator called super trend. So basically, if it does not, when you bought here, okay, or maybe during this rebound, as long as the super trend does not turn red, you don't have to sell. Okay, as long as the super trend does not turn red, you probably do not have to sell. Okay, this is one of the easiest way to trade the trend. Let me just see. Okay, this chart was being prepared, I believe, was like last week. And look at the stock now. Okay, look at the stock now. So basically, you can see that, okay, if you buy here, you go up, come down, okay, it did not turns red, meaning that your trailing stop is not being hit. And then right now, it turned up again. Okay, it's a little bit volatile, but just to share with you that, okay, the this is one of the easiest, okay, one of the easy way to follow a trend. Okay, what else? Okay, like I show you some example just now. Okay, tax cam. Okay, you can also see that if, okay, now if you hold the trend all the way up here, all the way up, and then suddenly it drops, you don't know how to exit. You can use super trend to guide you, so you exit here. Okay, it's late, but it's fine. You can never take a profit at the highest point unless you are lucky. The reason why we have trailing stop is because we let the stock grow until it cannot grow and it turns back down and the trend bends, then we sell. So maybe you buy at this rebound or at this rebound or at this rebound, at this rebound, okay, and then you sell here. The only time you lose money is you buy at this rebound. Probably you lose a little bit, okay, but losing is also part of the game. The only thing is how much you lose. Probably you buy at this rebound, the moment you sell, you lose about 15%, which is a little bit too much for my liking. But anyway, okay, for high volatile stocks, this is what sometimes you have to deal with. And here is when it start breaking out. Okay, so when it turns green, okay, it's also meaning that it also means that it has turned a little bit bullish. So here you can see that you have, okay, higher highs, you have higher lows. Okay, so here when it immediately turn green, you don't have to buy first. You wait until you retrace, go up, you buy here. So when you buy, you set a stop loss. Okay, you set a stop loss at somewhere below the swing low. Okay, it could be 9% stop loss. And until today, this position is bringing you about 22%. Right? It's bringing you about 22%. So again, this is just following trend. There's no guarantee, but I'm just showing you how this could work. Okay, and also another one could be Bonia, which today dropped quite a bit. But just to demonstrate to you, okay, you can see that previously you could be buying at this rebound, okay, and then sell it here. Not making a lot, but at least you protect yourself. Who knows, it becomes boom, downtrend. Okay, but after that, it decided to go up. Okay, it retrace back down, go up. You can probably buy here, you can buy here, you can buy here. And then here is the sell signal. Or when you see a double top, and then there's a price rejection here, you can sell slightly earlier. And recently, it go back up and then consolidate and break out. Okay, probably you can enter this breakout. Okay, but you will end up not making money as of today. And there's an engulfing here. So might not be great. Again, trading is not about being right all the time. Okay, it's about a strategy. Okay, it's about a strategy. So there are also ways. Basically, this strategy you can use in many markets. Okay, basically all markets. If you're trading Hong Kong, okay, you can use in Hong Kong shares as well. But there are not a lot of great Hong Kong uptrend stocks right now. Just to share with you some of the stocks that I find it worth watching and interesting in the US right now. Okay, for example, Apple. Definitely Apple has regained the strength. So you can see that it has been going up, series of higher highs, higher lows, and things like that. And recently, it dropped and go up. Okay, so if I were to set a trading plan, okay, probably I can buy when it rebound to 171, and I'll set a stop loss below this swing low. I can probably set below this super trend. And for my liking, if I'm trading mega cap stocks in US, I usually don't want to risk more than 8%. If it is like mid caps or like middle tier kind of growth stocks, then 10% is what I prefer. So you can see that the risk is about 8.95%, which is fine. Okay, which is fine. All right. So again, not a buy or sell call, just to share with you that what could be the situation I'm looking into buying. All right, and you can also see that if you were to put up the EMAs, okay, these are EMA 20s, which a lot of people use to plot entries. So basically, this is also something that you can use to guide you. So first, uptrend, okay? First, uptrend, track. Second, entry. How can you plot an entry based on rebound? Can, fine. Set a stop loss down here, fine. Then you're good to go. These are my workflow. Okay, if it continues to go up, then I move my stop loss upward every time it forms a wave. If it goes down, then I hit, then my stop loss is hit. So with Philip, you can trade stocks or even the CFD. There are many options and choices Philip can provide you. Now, just to give you another example, Coke. Okay, again, this is an uptrend. Okay, uptrend, and then recently we can also see that it is going up. Okay, higher highs, higher lows, higher highs, higher lows. Okay, so uptrend for sure. Now, if you know how to see these EMAs and things like that, you can also know that, okay, EMAs are in the sequence. This is an uptrend. It's above the 200 days, is uptrend. So again, here we have a pullback and then rebound. So if I were to enter the stock based on rebound, probably around 64, 65, then I want to set my stop loss probably below this level, which is the midterm support, and the risk is just, or even below this. This is the first swing low, the second swing low. I can probably put even lower than the second swing low to give me extra protection. And you can see that the stop loss is just coming in at 4%. So kind of like a low risk setup for this one. So again, first thing, uptrend, check. Second, do we have an entry? Yes, definitely we have. Check. Can you set a stop loss? If you can, check. Now, I also want to share with you that if you are looking into stocks, probably like this, okay, when the stock is shooting up, I don't chase. Okay, I don't chase because it can suddenly turn down like this. So if you're looking at the stock right now and the stock is going up and up and up and up, at least this is my personal practice, I wait for a retracement. Now, good stocks, great stocks, they can take a pullback and then they will continue to rebound. So there is no rush into entering. All right. So just to recap the steps, First, we want a good trend. If it is uptrend, check. Second, we want an entry. So how is a good entry? It takes a little bit of retracement and then rebound. This is a great entry, or it breaks out. So either higher high or higher low situations. Third, once you have the entry, we want to have a stop loss. No stop loss, don't enter. That's a way to protect yourself. And last but not least, if the stock goes up, we move our trailing stop upward. If you're afraid, take a little bit of profits first. All right, so that would be all for my sessions, and I'll pass the sessions back to Hong Sing for some Q&A.
Yeah, hello. Yeah, so very thank you for Mr. Bong Jeen Hao for his sharing. Now we're going to proceed to the Q&A sections. And we have received quite a lot of questions from our question box. Very thank you for all of the audience to respond on it. But I will just pick around 2 to 3 questions due to time constraint. Yeah. So the first question I think I will pick for. Okay, I'll pick for this is Muhammad Ashraf Azza. What do you think is the effect of rumors like in the Malaysia's the upcoming Pilihan Raya 15th in the stock market or index? Yeah, so Mr. Bong Jeen Hao, yeah, would you like to answer for this question?
Is there a way I can see the question here at
Yeah,
my
it's
side?
actually you can see at your right hand side, and then across it you have see a question bar.
I
You're able
don't
to
see a
show it.
question. I don't see the
Okay, how about like
question.
this? I take a picture for you so that I direct send to your WhatsApp. Is that okay?
Yeah. You take a picture of that question.
Okay,
Okay,
sure.
but just to in general, okay, I don't care about news. Okay, in general, I don't care about news because you see, just take the reason example. Paul is going to speak in about an hour and 10 minutes. Okay, and we look at the market. Okay, and if we look at the market seems like it's trending up. Of course, it might go down a little bit, but again, if we always look at the too concerned about news, okay, that is going to sometimes make us not dare to enter. The fact is, in the market, there are always things and news that is going to um, harm the market or creates fears in the market. So I got a question. What do you think the effect of rumors like Malaysia, the upcoming PRU 15, the stock market or index? Actually, I don't care about all these things. Okay. I don't care about all these things because you just follow the flow. Okay. That's just my way of doing it. There's no right or wrong because I tend not to care about news. You just take an example. Okay. When the market was going up during late June or early July, a lot of people still think that the market is, probably is going to go down because of a lot of economic factors. Okay. And guess what? We follow the trend and it keeps going higher, high and higher low, higher, higher, higher low. And on the during the last week of July, I told my students and I also share in my Telegram channel that guys, I'm buying. Okay. And since then, the market has already gone up. But since then, we still have a lot of bad news happening in the market. So the key is the way I trade is I don't care about news, I don't care about rumors, because the more you care, the more you don't dare to enter. Okay. And that's the first thing. Second thing, always have stop loss. Okay. I pick the strong trends and I find a great entry with an ideal risk, and then I'll enter and I let the stop loss to do the job. All right. I hope that answered Muhammad's question. There's no right or wrong, okay, by the way. There's no right or wrong. This is just the way I do things. And for trend followers, okay, you can go and Google Michael Koval trend following. He wrote the book called Trend Following, and in his website, there's one article says that he literally just point that news are BS. Okay, rumors and news are BS. So there are a lot of write up you can see. You can also buy the book called Trend Following and read it. It's very thick. Okay, so yeah, that's just my sharing and just a little bit of my 2 cents, speaking from me as a practitioner. All right, thank you.
Okay, sure. So we goes to another questions. I think a lot of our audience is the person who's trading just right now, cause that we come with some of the very latest news question from here. So I think I will point out this question from Kyrie Yani, which is what do you think about current announcement of winding up the Sabah dynamic in relations with the jump to historic low share price?
I got no opinion. Okay, I got no opinion. Um, this is a very sensitive question. Okay, when you talk about this company. Um, okay. Anyway,
So yeah, okay, yeah. we received it. So that how about we proceed to another
I'll just share.
questions?
I'll just say.
So okay, yeah.
Okay, because I got threatened for saying that many years ago. I got threatened because of this stock. Now, do you know that? Okay, I don't want to point. I don't want to say too much, but there are also two companies that are related to this company, and that two companies were in the uptrend in 2020 and in 2020 to be specific. And there are people who ask me questions like, is Serba Dynamic a good company to trade? During that time in my live stream, I just mentioned that personally, from a trend followers perspective, I wouldn't even touch this stock. And I think a lot of people tend to relate to a lot of things. But from a trend followers perspective, my reason of not buying into Serba Dynamic is very simple. The stock is not in uptrend, despite the fact that the other two companies were actually in an uptrend, and we made quite a lot of money from the other two stocks. And some people have this weird thinking, okay, if these three companies are related, and two of the three companies have already being they are already being pushed up in terms of share price, then the third one will be pushed up as well. I just want to say that there's no such thing. Okay, don't try to link different things in the stock market. We only follow the trend. Just like I give you guys some homework. Okay, check when did FCPO enter into uptrend versus when did plantation stocks in Malaysia go into uptrend? Because a lot of people like to say, okay, FCPO price go up, plantation stock will go up. Are you sure? Okay, plantation stocks at the most generic level, they only go up 1 year after FCPO enters into an uptrend. And also some people think that crude oil price go up, okay, is in an uptrend. US stocks, ExxonMobil, Chevron, they're in an uptrend. And Malaysia, oil and gas stocks, there will be push up as well. Are you sure? Okay. So to me, if the stock is not in trend at first place, I wouldn't look at it as well. Okay. And don't try to think that, okay, if there are three companies, okay, they are related, two already been pushed up, one haven't, then the third one will be pushed up as well. Just to let you know, if I got three cars, Monday I drive the first car, Tuesday I drive the second car, it doesn't mean that third day I have to drive the third car. You got to understand this part. Okay, so why is it so? There are reasons that you might not know. Maybe my third car is having a little bit of issues. That's why I'm not driving it. But please don't expect that Monday I drive my first car, second day I drive my second car, and third day I will drive my third car. There's no such things. There are a lot of things that we don't know in the market. Okay, so again, Serba Dynamic, if you go to if you look at the chart, the trend ends during the beginning of year 2020 and it never recovers. So at first place, I don't mess with this company. Okay, and this alone, if you practice trend following, it lets you avoid touching this company. Okay, so what do I think about the current announcement of winding up Serba Dynamic in relation with the jump to historical low share price? My question back to you is, why are you even looking at this company? All right, so because even though it's trading at like 4 cents right now, I have no intention to touch that. Okay, this is just my opinion because I trade trends. I don't speculate. Although some people might think that, okay, if you buy at 4 cents, then if the stock go up to 6 cents, you can make 50%. That's generally not the direction that I'm going. So if you ask me, my opinion is downtrend, and I don't speculate stocks. And as a trend follower, I don't look at downtrending stocks. All
Yeah.
right.
Thank you very much for Mr.
So
for
yeah,
he pretty clear clear answer on this question. So due to the time constraint, I think I will just leave it at one very last question. Okay. So the one very last question is that from KL Kwan. Is asking that is the super trend indicator that Mr. Bong shared just now is suitable for commodity or futures?
Okay. For these kind of super trend or whatever indicators, like some stocks, you realize that EMA 20 is not a good one. So actually, indicators often works in like all across different things. The only thing is, for different time frame, for different instruments, you need to back test it. Like for example, we always back test a lot of things, like whether these stocks works well with EMA 20, or is it better if we use EMA 30? Okay, in the past, did it tend to respond with 20 or 30? This is the thing that we need to, if you really want to get into the nitty gritty, this is the back testing that you need to do. Okay, now if you plug the super trend into a chart, and then the super trend just go wow, like suddenly a few days green, then red, then green, then red, then green, then red, then probably is not the best fit, or you need to change the parameters, or you need to change the the time frame, right? So just, I'm not sure which futures you are looking at, okay? But in general, from my experience, okay, super trend can work with things like FCPO, okay, things like FCPO, but it also much depends on your parameters. Okay, it also much depends on your parameters. All right.
Okay.
Yeah,
So yeah,
that's
thank
the
you very
answer.
much for thank you very much for Mr. Wong for his very insightful and also very clear on all of those Q&A. So I believe that all of you have been get what have been shared from Mr. Bong. So before going to end for this, if you are thinking that all of our webinars is very useful, you are may you are may welcome to stay connected with us on our Facebook, Instagram, LinkedIn, or YouTube by searching as below. So that like and follow our page. There are actually valuable freebies that we consistent updates like podcasts, our event promotions, announcement, or even the latest markets news on our social media. So our recorded video will be also uploaded to our YouTube channels. So you are advised to subscribe us lah. Welcome to subscribe us. So next up, yeah, you actually can scan this QR code to register for our upcoming event as well. As for information that Mr. Bong will also have another series, another more advanced on these webinars themes topics regarding of the trend following with us on upcoming. So yeah, you can scan the QR code so that you can attend or register for our next sections or next webinars with Mr. Bong with us. Okay, so yeah, this will be the context for our branches. So if you have any inquiries, do not hesitate to contact us through any methods of your convenience, be it phone calling, emails, website, or just direct live chat us on our Facebook Messenger is also ways for you to refer. So our representative will respond to you in a very short while. Okay. So with that, yeah, we'll end these sections for today. We appreciate well of you times to join our webinars today, and many thanks to Mr. Bong Jeen Hao for his expertise and insightful sharings. So good night, everyone, and happy Fridays. Yeah, we'll see you very soon. Thank you, Mr. Bong.
Thanks everyone for joining. Thank you.
Yeah, okay, thank you. Bye bye.